You find your dream home on Zillow and look at the estimated mortgage payment and think, perfect, I can totally afford that. But here's the thing, you might be in for a surprise, and not the good kind. Those numbers you see, they're often way off. My name is Jocaro Dodd, Maryland realtor, and in this video, I'll show you why Zillow and Redfin's payment estimates can be misleading, especially for renovated homes, and who you should trust to get the most accurate numbers for your monthly payment for the purchase of your home. Let's look at a scenario. You find a home for $300,000 and Zillow or Redfin says the monthly payment will be $1,800 per month. So let's see how they got those numbers and why for most of you, this number will not be accurate. Zillow and Redfin's default down payment on their calculator assumes the buyer will be putting down 20% toward the purchase of their home. So for a $300,000 home, 20% would be $60,000. I help a ton of first-time home buyers, and I can count on one hand how many of them had 20% to put down for the purchase of their home. Putting 20% down on a home is no longer required to purchase a home and has not been for a long time. If you're using FHA, you'll only need 3.5% for a down payment. And if you're using a conventional loan, you'll only be required to put down 3%. $10,500 is a lot easier to save up than $60,000. If you have the money for a 20% down payment plus money for an emergency fund and furnishing the home, then yes, put down 20% because that will keep your monthly payment lower. So if the purchase price is $300,000 and you put down $60,000, your loan from the bank will be $240,000 versus the FHA option, which is 3.5% down or $10,500, which makes your loan from the bank $289,500. This is the first major offense. A difference of $40,000 can mean a $250 a month increase. Again, putting 20% down on a home is no longer required to purchase a home and has not been for some time, which is why it's frustrating to me that these calculators are not giving people the numbers they will likely see. Let's take another look at a way assuming 20% down will impact your monthly payment. I'm going to pull up a listing that I have here in Baltimore, Maryland on Redfin. It's currently listed at $285,000. It's completely renovated. If you know anyone interested in living in Maryland, you can connect with me using the link in the description below. Now, using the default settings with 20% down, the monthly payment here is $1,774 per month. And you can see Redfin breaks it down so you can see the principal and interest at $1,396, property tax at $302 per month, and the estimate for homeowners insurance is $76 a month. Again, this is with 20% down. If we adjust the down payment to 3.5%, you'll notice your principal and interest payments increase due to the increase of the loan, and another line item appears here. In addition to the principal and interest, your property taxes, and your homeowner's insurance, you'll also have mortgage insurance, which your lender is going to make you pay for to cover them in the event you default on repaying the loan. As you can see, mortgage insurance alone adds an additional $172 per month to the mortgage payment, according to this calculator. The third reason Zillow and Redfin mortgage calculators are inaccurate are the property tax estimates. Property taxes are a percentage of the home's value and is a primary source of revenue for the state, and local government fund things like public schools, public safety, road construction and maintenance, trash pickup, all that jazz. I live in Baltimore, and we unfortunately have the highest tax rate in the state at 2.048%. If you're purchasing a home that was renovated, the investor may have bought the property at $85,000, and after it's all fixed up, let's say it sells for $300,000. Redfin is going to use the current tax assessed value of the home, which may be $85,000, or it could be less. $85,000 times the tax rate is $2,108. And if we divide that number by 12, you get $175 a month. That goes towards taxes. Now, your taxes may stay the same for a while, but when the property value is assessed at the new purchase price, let's take a look at what those numbers can be. $300,000 times 0.0248 is equals $74.40 for the year in taxes. If you divide that number by 12, you get $620 per month. So you have $172 for mortgage insurance using the previous example and $445 difference for property taxes from the example I just went over. These are huge differences and a deal breaker for most people when trying to determine affordability. So who should you trust when you're preparing for your home search? I recommend you talk to your lender for more accurate numbers. Do not rely on what your agent says. I have given my clients my estimate on what I think their payment will be, but I always tell them to confirm with the lender. So if you see a home you like, yes, you can adjust the inputs on Zillow or Redfin apps and do the calculations on your own, but I recommend sending the address to your lender and asking them for a pre-application worksheet, which will give you a breakdown of your principal, interest, real estate taxes, and mortgage insurance at the current interest rate. Those numbers will be the most accurate. If you'd like to get in touch with me or one of my trusted lenders about learning more about how you can prepare for your home purchase, you can schedule a free 30-minute call with me using the link in the description below. And check out my new podcast, the Get the Keys podcast, where I interview homeowners or aspiring homeowners just like you, and you'll be able to hear about their journey toward homeownership. I'll see you in the next video.